What's up, guys? Welcome back to tickergenie Daily Signal.
Good afternoon, everyone, and welcome back to today's SPY market update. Today's market is a classic example of why patience often beats prediction. Our daily signal remains bullish, with the core model holding a 50% allocation and the adaptive model maintaining a 60% SPXL allocation. So the broader trend hasn't changed. SPY is still trading above its 20-day, 50-day, and 200-day moving averages. Volatility remains contained, and the intermediate uptrend is still intact. However, our gamma regime tells a very different story about today's trading environment. SPY closed around 747, while the gamma flip sits at 750. That puts price directly inside the gamma flip zone, where dealer positioning becomes unstable. In this environment, small moves above or below the flip can quickly reverse, making false breakouts much more common. At the same time, SPY remains trapped between the 745 put wall and the 750 call wall. Think of it as the market being squeezed inside a very narrow trading range. Dealers are actively absorbing volatility, which makes sustained directional moves much harder. This is reflected in today's gamma intelligence readings. Gamma compression increased to 82, one of the highest levels we've seen recently. That tells us energy continues to build beneath the surface. But here's the important part. Breakout fuel is only 36. Release risk is only 38. And the overall release setup score is just 45. In other words, the market is compressed, but it still lacks a catalyst. A lot of traders see high compression and immediately expect an explosive move the next day. That's not necessarily how it works. Compression tells us that a larger move is becoming more likely over time, but it doesn't tell us exactly when that move begins. Today's data suggests we're still in the waiting phase. Looking at dealer positioning, today's structure is remarkably stable. The gamma flip barely moved. The call wall was essentially unchanged. The put wall drifted only slightly lower. That tells us institutions haven't meaningfully changed their positioning overnight. The market is still balanced, with neither buyers nor sellers gaining a clear structural advantage. From a trading perspective, that's exactly why our daily signal is holding existing exposure instead of increasing it. The trend remains healthy enough to stay invested. But the breakout filter is still not confirmed, so there's no reason to aggressively add new risk. Now let's talk about tomorrow's key levels. The first upside level is 750. But reclaiming 750 alone doesn't change the overall picture. The more important level is 755. That is both our upside trigger and very close to the recent 20-day high. If SPY can break above 755 and then confirm above 757, dealer positioning becomes much more supportive. At that point, the current compression could finally release to the upside, potentially starting the next leg higher. On the downside, 745 remains the first support level. If that breaks, all eyes shift to 740. That's our downside trigger, and also where negative gamma begins to accelerate. A confirmed break below 740, especially below 738, would likely increase volatility significantly and could force systematic models to reduce exposure again. So here's how I see tomorrow. I assign about a 55% probability that SPY continues chopping between 745 and 750 as dealers keep volatility suppressed. I see roughly a 20% probability of a move above 750 that ultimately fails and falls back into the range. There's about a 15% probability that buyers finally push through 755, triggering a confirmed breakout and opening the door for a stronger rally, and I assign roughly a 10% probability to a break below 740, which would shift the market into negative gamma and create a much more volatile downside environment. So what's the takeaway? The broader trend is still bullish. The market structure is still healthy. But today's data says we're in a waiting game, not a chasing game. Until SPY either breaks above 755 or loses 740, the highest probability strategy is to stay disciplined. Let the market reveal its direction and react to confirmation instead of trying to predict the next move. Thanks for watching, and I'll see you in tomorrow's market update.
I'm an AI engineer building quantitative trading systems powered by data, market structure, and adaptive models. Follow for daily AI-driven market signals and real-time trend analysis.